were capped as investors expected the coronavirus contagion outside China to have a limited impact on the Chinese market. China's major indices fell sharply in early trade after a surge in cases outside mainland China triggered that sharp fall in global markets as investors fled to what were safe haven stocks. Overall, though, stocks found some sense of stability on this morning after a wave of early selling petered out, allowing investors then to take a breather from COVID-19 fears. Some dealers cited a Wall Street Journal report as a possible vaccine as helping sentiment, though human tests of the drug are not yet due until the end of April, and the results not until July or August. So, how do the markets look? Well, a bit of a mixed picture here. The Nikkei in Japan was a big faller then, 22,605 points, 3.3% lost today. But of course, it was playing catch-up, having been closed yesterday. The Hang Seng is moderately higher, though, moving 0.2% up, 26,878 points there out in Hong Kong, while the Shanghai Composite, of course, down on the day, 0.6%, sitting at 3,013 points. Over to the United States now, where stocks plunged last night, with all three major indices plunging more than 3% amid rising risk aversion. The Dow Jones Industrial Average fell 3.6% to 27,960 points, and the S&P 500 was down 3.3% to 3,225 points. The Nasdaq Composite was down 3.7% there, 9,221 points. One of the biggest fallers, of course, on that market as well happened to be the likes of Apple, who have certainly taken strain with production out in China not coming out as well as they would have liked, and certainly hurting the business on that front. On the European market side, well, the negativity does persist as some try to find some sense of stability. So there is negativity overall, though, but perhaps some stability in hoping that the contagion will perhaps be kept within the borders of some of these countries. Of course, Italy struggling with the coronavirus as well now and becoming a new hotbed when it comes to that crisis. But overall, on these markets, red across the board. Around 0.5% down on the local index as well. So the JSE All Share not doing too well either. Yesterday, it fell around 4.3% overall. And that was the biggest fall in South Africa's market, therefore the All Share, that is, in 11 years. Not since the global financial crisis of 2008 have we seen the JSE All Share fall that hard. And yesterday was that day. Slightly up for now, 54,896 points. The industrials favoring some positivity, sitting just above that 70,000 point mark, but some negativity there for the financials. On to the commodity stocks. Well, it is safe haven trading for now as you look at some of these counters. So overall, the resources picture is sitting pretty, while the platinum counter is also headed higher. Let's check in on the resources. Well, they've certainly performed a little bit better of late. A little bit of a weakness when it comes to gold, perhaps not inspiring too much trade there, but platinum ticking higher, still below that $700 a fine ounce mark, rather should I say $1,000 a fine ounce there. 56.24 for Brent crude. Of course, issues around supply continue to plague that one there. And then over on to your currencies then, 15.19 for a US dollar, more weakness. That coronavirus certainly impacting things, but let's not forget South Africa does have that budget speech, which is due out tomorrow by Finance Minister Tito Mboweni. If my calculations are correct, it should be around 24 hours and 26 minutes or so until he delivers that fateful address. How exactly will he solve South Africa's problems? Where is he divvying up the money to? Will we see another VAT hike? And will the state of taxes in South Africa get any better? Those will be the questions, and perhaps a little more fear and worry plaguing South Africa's currency. So some weakness all across. On to the BRICS nations. Well, India is certainly of keen interest, so you'll take a look at the rupee, which does sit slightly positively when compared to the US dollar there. All right, let's take a look then at this market picture and really chat about what has actually happened over the last 24 hours. Kabelo Tula joins us live from the Johannesburg Stock Exchange as we unpack this data. He's from FNB Wealth and Investment. Kabelo, thank you so much for the time, man. It certainly has been an absolutely incredible week with records flying, but in the opposite direction. This time, the all-share index going down more than 4% yesterday. How big a deal was that for you on the trading floor?
Hi, Arabile. Yes, a terrible day on the day. The all-share in the last century, one of the top 15 days in terms of downside. Essentially, we saw broad-based selling. I think there's general concern about valuation, and obviously headlines is the coronavirus, but I think there's a lot of anxiety at the moment that's underpinned, as you would have seen, by a constant surge in the gold price. So I think we're still in for some headwinds going forward.
Yeah, so you reckon the all-share index at the very least is headed even lower?
Absolutely. I think, there's the question really is about valuation. And obviously now, whether we can find a cure for the coronavirus, it doesn't help that it's spreading as quickly as it is. I think now we're sitting on 4 continents, maybe 5. And yes, as much as there's talk of a vaccine or a cure, it's still got the market in its grips. And I think that's going to lead the narrative over the next short while.
Yeah, look, it's going to take quite a bit as well. And as they said, human testing doesn't happen till April at the very least. July, August maybe is when it could be rolled out. So we're in for a tough one at this point in time. All right, let's take the focus and bring it home just slightly. We've seen a lot of equity news happen on the local front. What is catching your eye?
Look, we've had a string of results, and I think probably the retailers have probably stood out.
Yeah.
But it's broad-based. We've seen strong gold movement. We've seen weakening platinum moves. But I think the story does largely center around the retail numbers that we're seeing out of the likes of ShopRite and those that we can expect out of the fashion retailers very soon. Yeah,
let's chat about ShopRite's earnings then. A bit of a struggle for them as well, right? Their markets aren't necessarily doing too well. They try to keep inflation, in-store inflation, that is quite minimal as well. But it must be very tough now in an environment where everything is low already, that you have to try and perpetually keep it at those levels to keep enticing your consumers and maintaining your market share.
That's it. As you can imagine, it's going to have a depressing effect on your margins. And, South Africa, fortunately, in this particular set of results, has come out quite strong. A lot of ex-SA, as in the rest of Africa, operations have battled. In fact, some of those earnings contributing or dropping in the region of 62 and a bit %, where South Africa was positive. And I think you're seeing a fierce battle for market share at the moment. And yes, look, at some point when I left the office, ShopRite was up 2%, but had been up 10%, which was really a sign of relief for ShopRite shareholders.
Yeah. All right, let's move our attention to Standard Bank very quickly. A non-executive director, Hao Hu, decides to leave the entity with immediate effect. Now, he's pretty much a board representation as deputy chairperson of the ICBC, which has a more than 20% stake in Standard Bank. Are there any fears here? Are we worried? Should there be some concern here for investors?
No, look, I don't think so. I think, very little detail was given in terms of Dr. Hu's immediate resignation. I didn't see the share price really reacting in a panicky way outside of general market forces. I think the International Construction Bank of China or Industrial Bank of China could maybe just be looking for a change. I don't think they have any interest in changing their stake within Standard Bank. I personally don't think there's too much to be read into it at this point. Hopefully they'll find a replacement to get into that deputy chair position soon.
Yeah, call me a conspiracy theorist, but this happens on the back of the courts really saying that Standard Bank cannot get access to that collusion case, the forex collusion case, and they wanted the investigative reports to be seen, and Standard Bank were rebuffed and told, no, you actually cannot see them. And then this happens in the same week. It kind of just feels as though perhaps there's some tension there, but you say perhaps not so much so. So we'll keep it at that for now and hopefully get a firmer description and discussion point on that one. Very quickly on the currency, 1518 odd. Weakness, is that derived for tomorrow's budget, or is it just the weakness in the global market really hurting emerging markets like ourselves?
Yes, so we have seen a trend across the emerging market currencies. I don't think we're operating in isolation here. I had a look, the Russian ruble Brazilian real, and the Turkish lira were all weaker against the dollar, really the dollar being that safe haven currency. And I think a lot of people, given the gravity of this virus, are now really starting to gravitate towards that dollar. But yes, there is an element of anxiety ahead of tomorrow's budget speech. And I think, like we said at the beginning of the week, watch this space. I think we were late last week sitting at about 14.99, and we've subsequently lost about 20 odd cents since then.
Yeah, it doesn't rain, it pours. Kabelo, thank you so much for the time. Really appreciate it. Kabelo Tola there, FNB Wealth and Investment Portfolio Manager, joining us live from the Johannesburg Stock Exchange, helping us unpack that market movement. We'll be back with more news, of course, right after the short